This is the dawn of the AI VC ecosystem, investments, innovation, and industries. This is what you've been waiting all day for, folks. It's the VC panel. We have here assembled a panel of distinguished VCs that invest in this space, and we're going to talk about what's getting funded, what's not getting funded, where we are, what you as entrepreneurs ought to be focusing on. So before we start, I would like to give each of our panelists here an opportunity to do just a quick introduction of who they are and why they're here, how they come to this space. Joe, why don't we start with you?
All right. Thank you, Roger. Thank you, Rob, for inviting me here tonight in Silicon Valley. My name is Joe Jason. I'm with a firm called DNA Partners. We are a seed investment firm, 50 to 500K. Our geographies are USA and China. Yes, China. And the vertical that we invest in is, I'm going to say it twice, digital media value chain technologies. I'm going to hold off on saying it again. What we're specifically focused, in software on the infrastructure of digital media, so the transport of digital media, like encoding, decoding. So once again, digital media value chain technologies. And my background's primarily been mobile wireless since '93. I was working for IBM in '95 for analog networks, hooking up a notebook computer to a satellite or an analog network back then. So it's been a lot of years for me in the mobile wireless industry. And I've chaired committees in Washington, D.C. for infrastructure, and I founded the Silicon Valley Forum's mobile software developer group and ran it for 12 years here in Silicon Valley. I bring that up because I see some friendly faces from the past here. And once again, I'm Joe from DNA Partners, and primarily mobile wireless background, USA and Asia.
Okay, thanks. Carolyn?
Hi, everyone. My name is Carolyn Funk. I'm with Blue Bear Capital. We are headquartered in LA. I'm here in the Bay Area, and we focus on companies that target the energy vertical, specifically software and data-driven business models that have as one industry vertical being energy. Only do B2B investments. We invest in early growth companies. If you have the first 2-3 pilot customers and have proven that there is a market for what you're doing, we'll help you scale. We invest about $500K to $2 million into companies located in North America and Europe. My personal background is in the energy space. I spent the last 16 years working in energy, starting off in Germany, doing consulting and policy development here in the Bay Area, working in innovation with Siemens on their smart grid team, and spent a couple of years as an operator in energy storage startups, and now on the VC side. Again, Blue Bear Capital, if you have technologies that are targeted towards the energy industry, would love to hear from you.
Great, thanks. Jeff.
Well, so I'm Jeff Peters. I'm with Autotech Ventures. There's two unique things about us. One is our focus, so we're all things transportation tech, and that includes everything from the manufacture of a vehicle, its sale, repair, insurance, how those vehicles are used, whether it's ride sharing, logistics, up until the time that they're recycled or sent for remanufactured parts back into a vehicle. And those vehicles could be scooters, bikes, cars, trucks, SUVs, big mining vehicles, construction vehicles, ag vehicles, trains, as long as they have wheels or tracks, it's within scope for us. The second unique thing about us is our LP base, primarily corporate investors into our fund. We have about 30 corporate partners to date across 2 of our funds. We also have some financial investors. We are financial investors, but our pitch for entrepreneurs is, hey, look, we can give you distribution to all of our LPs and beyond, and I think we execute on that pretty well. My personal background, I guess I took apart cars as a kid, I sold cars at my buddy's car dealership back in Ohio. Went into aerospace engineering, worked for Northrop Grumman Space Technology for a number of years before going back to school and getting a PhD in operations research, and then before coming out to the Valley here on a postdoc at Stanford, and then joining Autotech Ventures, since I had all these strange experiences that touched on Autotech's thesis. Looking forward to the conversation today.
Hi, I'm Ephraim Lindenbaum, and I'm a recovering entrepreneur. So I sat in your chair for many years, exited in the first 99 dot-com boom, and then spun up Advanced Ventures. We are a 99 vintage maiden fund. We're one of the few remaining left, so we're either pretty good at what we do or gluttons for punishment at this stage. We've invested now over the course of 3 funds across information technology, communications, and sustainability. You know, that's evolved, as you'd imagine, over 20 years. We have been AI investors since the very beginning. I think our first deal was actually on the ag side of AI in 2000. We actually had an exit in the category in 2004, Corvigo, ourselves and Sequoia, sold to Tumbleweed Software. Historically in the VC space, if you get a win somewhere, you never go back because it doesn't really get any better. But as we like to say, we're very involved in the 5th coming of AI now. We don't really see it as a standalone category. We see it as enabling technology. You know, really it's very vertical focused from our end, and particularly we just exited in the fall here with a telehealth company called SnapMD, which actually had some AI behind it. And it was just a great vertical story, and it was bought for its verticals, not its AI.
Thanks very much. And I'm Roger Royce. I'm the founder of the Royce Law Firm, business, corporate, and tax firm. In Menlo Park, we represent technology startups. So, Joe, I'm going to let you kick us off here because this is a question I always ask. It sounds like a dumb question, but it's not, because I get a different answer. If I ask 3 people, I'll get 5 different answers. What exactly is AI?
The definition of AI. Okay. My definition is, and I remember I'm only one person on planet Earth. My definition is an algorithm that learns by another algorithm, or an algorithm that learns by a human being. But primarily created by a human being.
So that's pretty broad. So your investment thesis, if you're investing in AI, that sounds like almost anything.
Well, I think AI has a tendency. To me, it's over 30 years old. It's just an acronym iteration. I mean, obviously, it's called artificial intelligence, but AI is the acronym, as we all know. But business intelligence, it's had many different names to me in the past. Obviously, you could argue with me about that. That'd be great offline. But I guess to me it's software and compounding of itself.
Okay. Well, I got a question for you and the rest of the panel. If it's over 30 years old, why are we still talking about it? I mean, what's new about this? Why now? What's different? As an investor, why are you all 3 of you, 4 of you, well, all 4 of you still looking at the space?
Well, I'm just going to continue to jump in here. I mean, I think it's if we put Cray research in as supercomputing, I think the quantifiable parts are moving much faster, and we have obviously quantum computing. So now we have AI that's learning faster and quantifying faster than ever, and so we just put the compounding in there as a slick solution set.
We slice up AI into some broad categories. So there's natural machine learning, there's natural language processing, and then there's this broader sort of Stanley Kubrick-y kind of AI that everybody likes to think about. And I think the application side of it is really what gets interesting about it. And from our perspective, machine learning, natural language processing has been around for a very long time. And what we're really just talking about here is it's getting better and it's getting faster and it's getting cheaper, which is all things we like, right? So as VCs, we kind of, at least in our firm, we break things into 2 categories, right? Better, faster, cheaper, or brave new world. The great part about this whole AI aspect is it's sort of this combination of the 2, right? Everybody had this vision in the movies and everything else about AI, but at the end of the day, it has to have real applications. So when you get a convergence where you've taken it from this kind of dream state into this better, faster, cheaper mode, where you can actually apply it to real problems in real verticals that are in big markets, then it gets really interesting, and that's how we tend to view it.
Yeah, I tend to agree as well. I mean, it's algorithms have been around for a long time. It's better, faster, cheaper now, and I think it's actually opened up some unique applications that touch on a lot of verticals that get people really excited. For me, and maybe it's the sector I'm in, it's the computer vision aspect. It's one thing that's been enabled by AI or machine learning these days that wasn't really available in the past to the same extent it is today. And that's really exciting. Perception for vehicles, perception for manufacturing inspection, perception on your phone, surveillance, et cetera, are all interesting use cases that have really been unlocked recently through the latest wave in AI that really didn't exist before. Another one's natural language processing, which I think is quite unique. A lot of the other things like, we use AI to, map your Uber better or whatever, not so interested in that because it's really not fundamentally changing anything from, operations research in the past. But there are some applications that are new in this latest wave of AI.
So Jeff, staying with you for a second. I'm sorry, did you want to jump in?
Yeah, just jumping in on that, I would even go so far and saying we're only calling it AI until we have developed an application on top of it and have it well understood. Yeah. So a little bit like a robot. I mean, for example, we've been welding with robots for decades now, and that's not a big thing. We're talking about, and we've been using like machines to wash our clothes, and that's just a washing machine and not a washing robot. We're still talking about the folding robot until we have that, hopefully sometime soon. Then it will just be the clothes folder or whatever you call it. And I'd say I think, like, for example, Rob, who's sitting at the back and organizing this whole event, he's probably used some AI following up with all of us and checking that we read our emails. And I think that maybe some automatic responders. So we don't call any of that AI because it's well understood already. So my hypothesis would be if it's still a black box and we don't really know what it's doing, then it's AI.
Well, let's talk about the use cases that might not be so obvious. Carolyn, your fund invests in energy. You said, how is AI used in energy? What is it doing right now, and what is it going to do you think?
So energy is an interesting...
A little closer to the mic.
Energy is an interesting industry because we are all using electricity every day and driving around our cars, and but it's still in the early stages of really collecting all this data. So I would say in energy we're just scratching the surface where we have the data to run AI on top of. So for example, one company that's in our portfolio, Element Analytics, their mission is to create that data lake from industrial applications and sensors to then be able to perform like machine learning and AI to optimize processes. So we're still at the stage where we're putting out additional sensors, collecting more data, and then kind of first steps towards using that in a more intelligent way. There are a number of applications that are already out there. We're looking at, for example, much like computer vision for automotive, a little different space. We've all experienced wildfires here. A lot of that is due to utilities actually not knowing where trees are growing. That's a great application for AI. We can see that through computer vision. We can predict how a tree grows pretty well. So they're like first good applications, but still nascent.
And Jeff, I was about to ask you the same question. I mean, where, other than you used an example of maybe Uber using AI to map a route or something, how would it be used in transportation tech?
I can speak to how it's used well in transportation tech by citing our own portfolio. So manufacturing inspection. So you can think of, and computer vision has existed in manufacturing for a long time. You have giant companies, Cognex, Honeywell, that make these cameras, but they're really looking at deltas and large-scale production runs. Like this widget looks different than the last widget, there must be a defect of some sorts. Now what you can do with deep learning or AI is look at any feature in an image, label it, train it, and then identify that going forward. So think of metal stamping. of chassis. Think stitching on seats that are very time consuming for humans to inspect, and that stitch could be defective anywhere in the seat. We have a company called Cogniac that's addressing that issue. We also have some perception for autonomous driving. We've avoided passenger car autonomous driving, but we have done off-highway autonomous driving with construction and mining. So perceive the world around you using computer vision and navigate, and also you can create new routes using AI as well. We see in other scenarios outside of our portfolio, of course, where the AI is just really sort of fluff around, a simple algorithm that you don't really need the jargon other than to raise money from investors. We've also, a little bit different than enabling technology, we've made some investments into sort of fundamental tools for creating AI models. And those are quite interesting, especially going to the edge. So one of our portfolio companies just was acquired by Apple for about $200 million, Exnor AI, and that's about taking machine learning models and deploying them on the smallest of chips, right? So Raspberry Pi Zeros, batteryless, even there was one thing that they did, it was powered by a plant, and the plant took selfies of itself. Using AI. That was just PR fluff, obviously, but the idea there is you can run these new models, these new capabilities, these new apps on any device, anywhere. And they had some interesting use cases, wake-up words for an automobile saying like, Marty Mercedes, map my route, and it doesn't, you can use a cheap chip. Computer vision, surveillance, security, all these are interesting use cases that can be enabled by, advanced algorithms at the end of the day, but I think there's some new algorithms that have been popping up in transportation. But, I'm blind to a lot of the other applications simply because of our sector focus.
Yeah, I mean, we've been investing in broadly this term AI or machine learning for many, many years. And, I think what's challenging to entrepreneurs, and I encourage you immediately to not get on the hype train, right? You get on the hype train and you're very, very going to quickly find yourself locked into that category. I mean, I remember sitting, on this street 3 or 4 years ago at a VR event, and everybody was VR driven instead of really talking about a real good business. And from an entrepreneur standpoint, I really encourage you to look at it as we've talked about on this panel as an enabling technology. Is it solving a real problem? And whether it's AI algorithms, learning algorithms, natural language processing, are you solving a problem? Because I think if you lead off with all of your investor communications with the word AI, we're going to dump you into the same bucket for the blockchain people that came through 2 or 3 years ago, and the VR people that came in through a few years before, and then the mobile people that came before that, and then the SaaS and the cloud and everything else. And at the end of the day, I think that the VCs that tend to be around for a long time tend to either be very vertical focused, they know what they do, or in our case, they just tend to be able to look beyond that and really focus on the core industries that underlie that. And, having actually invested in the transportation space over the years, we had an exit with Land Sonar to Triangle Software, which was a route planning software that used AI in 2006. So, this is kind of a hype curve that, kind of goes through its waves. So don't get caught up in the hype, get caught up in the business side.
Yeah, and I'll caveat that since I did say it's not about, or we have made investments outside of the apps or as an enabling technology, but really at the end of the day, the example I cited was an enabling technology. It was enabling an app that's trained in the cloud to be deployed on a cheap chip. That's the use case, AI or not, that's what they do.
Exactly.
Let's stay on that thread, since we've got a room full of entrepreneurs about things that have worked and been successful and have been funded. What other kinds of AR startups have you seen get funded historically? And especially, I think you said something about agriculture and AI.
Yeah, well, so, we've sort of looked at this machine learning space for years and years. When I was an entrepreneur in the mid-90s, we were using this for advertising technology, video compression, algorithms. We've been doing this forever. The real issue is, where does it stick? So, we started with an ag tech-based startup in 2000 that unfortunately was caught in the dot-com boom and was a victim of the fact that at that point agriculture was not really computerized yet, or more importantly, there was no connectivity. We moved into the machine learning side with Corvigo. I was mentioning that was an exit with Sequoia in 2004. I was just bringing up another one, Land Sonar, which was a route planning software company that we exited to Triangle Software in 06 with. And we could just kind of keep going down that. There's always been, I think, in most of our companies that, have had a software side, some level of a learning algorithm, right? Was it sort of HAL, or was it really just a piece of technology that made things smarter? And I think, one of my colleagues mentioned here, we're in this massive data overload space. So, being able to use these learning algorithms, are just fundamental, right? It's almost like where mobile was this boom, everything had to be mobile. Now, today, mobile is just part of the ecosystem. If it's not inherently mobile, it's there. So, I tend to find that throughout most software pieces, there is some of that learning side. So the question is, what's it doing for your business? Because, other than tools, which are great, and certainly if you're building enabling technology, but if you're, driving it in, some of the hottest categories, for example, where we invest is fintech, AI and fintech. It's been used by hedge funds and investors for 20 plus years. They had skunkworks operations using it, and now it's moving and being able to be translated down some very innovative apps. Healthcare, digital health, AI has been moving through that cycle for years. It's a great opportunity. If you follow us on Twitter or LinkedIn, just about every single day we're posting about digital health or fintech. Most likely there's an AI component to it. But those are real businesses that you're just making better, stronger, faster by building a better mousetrap.
Joe, okay, thanks. Joe, where is AI used in, I had to write this down to make sure I get it right, digital media value chain?
Well, we would invest in a company that would work maybe with, maybe a CDN or a content provider like Netflix to streamline the bandwidth, manage the bandwidth. So what I want to highlight was I was thinking in the real time here when the other panelists were speaking is there's a AI aspect for digital to digital. I think that's where DNA Partners falls into. And then there's AI for digital to physical or physical to digital. Like physical would be, managing photosynthesis with a plant. And you're predicting what's the light going to be and what does the plant need, or if you're working with agriculture. So in our domain, obviously, it's digital to digital. And we're mostly about the transport, whether it's wired or wireless, of zeros and ones. So I also thought of an example that everyone can relate to in the room is Nuance is the natural language voice processing platform that most voice companies use, called Nuance, and it's a public company, and obviously that was invested in Silicon Valley 20 plus years ago. And then, Morgan Thaler did a very early investment into Siri. I was talking to entrepreneurs last night, and we were talking about Siri and how is that going and the pros and cons to its certain situation right now. But Siri is definitely AI. So that's some of my comments.
All right, let me fast forward a little bit since I'm here on a table with 4 VCs who are going to tell us the future. You've told me what you have invested in. I guess I'd like to know what is going to be hot, especially for our entrepreneurs. And personally, I want to know when that washing machine robot's going to take my job away as a lawyer. Any predictions as to where this is going and what's next?
It's just in everything. There's a little bit of an AI inside model. I think every one of our portfolio companies are using it in some capacity, whether it's organically created code themselves or they're using something and knitting it together. Whether it's plant genetics or plant-based proteins or, molecular diagnostics or decontamination technology. They're all using some kind of a learning side. It might be a little piece of machine vision, might be a little piece of, natural machine learning to move the data smoother, sort faster, et cetera. So, when we look at the future where this implies, I mean, I think the most interesting things are digital health. There is a tremendous amount of data involved. Humans are really complex. We have a very small grasp of taking care of humans. And, to that degree, AI, machine learning, computer vision, et cetera, is going to be super interesting there. And then, on the agriculture and food side, I mean, the protein business is, pretty much 10x just about every other business. And, when you start thinking about the biggest business in the world is the food supply system. And there are 1,000 different ways that AI is being used and will continue to be used in that cycle.
For me, I think recently been investing on sort of two tracks within AI. One is on the thesis that machine learning models are no longer just running up in the cloud for inference. It'll be everywhere, fingertips, edge devices. So again, with XNOR exiting Apple, it's low power, low memory, low latency compute. These things can go anywhere, and you can snap applications on the cheapest of chips and put it anywhere in a room. So I think that'll create an ubiquity of all sorts of AI applications, and they'll be deployed everywhere. So very strong proponent of edge AI, whatever that means to you. The other investment track I've been investing on is autonomous off-highway robotics. So autonomous cars, a long way away, but if you can control your environment, I think this wave of AI, if you will, is capable of automating a lot of mobile vehicles. So think construction, mining, go over here, excavator, dump a load into your dump truck, go over there, dump it, go back and forth into perpetuity. That's a very interesting use case, clear ROI. So we've made investments in construction, mining, agriculture for these mobile robotics. Beyond that, it gets a little, maybe we might need the sixth wave for passenger cars. But those are the two places where I've actually, put money where my mouth is. Everything else, I don't try to predict the future. That's kind of why I took the job in venture capital, so that founders would sort of tell me what the future will be.
Yeah, I think from my perspective, we heard a bit about this earlier today. The supply chain part, really, there is a lot of efficiencies to be had using smarter supply chains and automating more of that, and AI can be of huge help. Additionally, helping workers in the field. I talked about I talked about the vegetation management in the utility industry, and if you think today there are people out driving trucks looking at things, we can help them, and we can actually make their world a safer place if we know where to send them and we don't send them up random wind turbines or poles or whatever it is. So giving those field folks additional smarts on A, where they should be going, and B, what they should be seeing and looking at. And lastly, I think there's a lot of edge case, like analytics opportunities in the energy industry. Those IoT sensors that we are putting out in the field, being faster to kind of get to the intelligence from those sensors. I mean, it's at our fingertips. It's quite here, but it's not. We're still doing it. We're doing investments in that space for sure.
Yeah, I'll just add to that. I think on the edge AI and what you're talking about, I think something what's quite interesting to me is software-defined sensors. So you have a camera, you can detect all sorts of whatever you want, right? Cat, dog, lever up, lever down, highly useful in a utility scenario. Yeah. That's really interesting because you can have a sensor, reprogram it, it's a new sensor. Interesting idea.
I think I'll bring in the tangible value chain here. For us, we look at AI in the software stack, whether that's a vertical look at it or a horizontal look. So I'll do the vertical. Obviously, we all know from being in Silicon Valley for so many years. But the horizontal aspect, if we're in a wide area network, metropolitan area network, a local area network, a personal area network, and now we have, if we want to say the edge is IoT. So all those touch points, whether that's wide area network mobile or wide area network landline, we want to be in those touch points to make the network go smoother. So that's why we invest in that. So infrastructure, software, and if we can invest in a company that can manage the bandwidth better and help a CDN or help out a Netflix end to end, that's where we want to be. So that's what I mean by vertical stack and horizontal value chain.
F, you said something a minute ago that's been bothering me. So I'm going
I
to
usually do.
circle back to it. You said that company, because we have a room full of entrepreneurs, and I was going to ask how they should approach you with their company that uses AI, and you said, don't lead with I'm an AI company. That sounds like I'm a .com or I'm a VR company or whatever else. I'm a blockchain company. So it just makes me wonder, is AI really intrinsic to most all tech startups? Because as I hear you talk, so many different verticals, so many different applications, so broadly defined. Maybe they're a different kind of company that uses AI, and that's a better pitch. Is that right, do you think?
Yeah, it's a tech, if you're solving a real problem, your job as an entrepreneur is to try and use this innovative and the best possible technology to solve the problem. In theory, we're investing in that company because of its fundamental business premise, unless, of course, it's a tool for the industry. We as a rule don't invest in tools, but, I think from our standpoint, entrepreneurs tend to like to get behind the hype curve, and there are a bunch of AI funds, quote unquote, and having done this long enough, when you're trying to raise another venture fund, you kind of need to differentiate yourself, right? Ideally, you end up like Autotech with a bunch of people who really know what they're doing in that space and they're very focused. But oftentimes it's, if you're kind of crowd surfing the broader space, you kind of get behind IoT or VR or AI or something like that. And, at least what we've seen in the Valley, these things tend to ebb and flow. So to Roger's point, if you lead off with AI, that's just not interesting. You don't lead with AI. You tell me what problem you're solving, and then you tell me you've got some really novel tech that may have some AI in it, and that's how you're solving it.
I wholeheartedly agree with that notion.
I do too. It's a little bit like if you were coming and saying, hey, I have this company and we have some data in the cloud. That wouldn't get anybody really excited.
But 7 years ago, like every deal we saw started with cloud. This is a cloud-based, and just insert word there, cloud-based potato chip. It could be anything, really.
Yeah, but on the panel, we knew that was equals a server, whether it's on-premise or off-premise or an or wherever that is,
Yeah, then they moved to IoT. IoT that does, X, and so I think the one thing you should learn as an entrepreneur is, if you come at us with a real business, with real fundamentals, that you're really making a shift or a change or disrupting a space, and there's clear line of sight to being successful there. The joke that we had, because, and this is a great story about AI, when we had Corvigo, and I remember, Sequoia came in and they were doing their due diligence, and the founders refused to share due diligence without an NDA. And, usually VCs, we don't want to sign an NDA. It's a big, hubbub and so on. And finally, what they said is, no, we've got gnomes in there that are sorting the email, because that's what they did. It was one of the first anti-spam companies. And it was so funny. And conceptually, that was about as much knowledge as many of the people that were starting to do the due diligence had at the time about the AI. Could have been gnomes in there, could have been hamsters, could have been anything, right? But the fact is, it really sorted email faster, and that's all that anybody cared about. If it was a puppy in the box, that would be fine too. So, again, don't get caught up in the hype around calling it AI. Get into the hype of being better, faster, cheaper, or doing a Brave New World solution and making a difference.
No potato chips, dogs, no AI out around that.
The only caveat I will add to that, I think that's how you should run a business. I think in raising capital, you could certainly lower your cost of capital by adding some AI for certain investors.
Yeah, right. There is like a hype curve. Yeah,
Depends on the competence of the team.
investor.
Yeah, I mean, I hate to say it, we've really gotten a lot smarter about this whole hype thing, guys. I mean, we caught on. You throw the keyword in there, and we caught on. So the word, and you've got to remember, we have access to really, really high quality experts. So the thing that you really want to make sure you don't do is come wandering in saying we are AI, and then we're going to go get a bunch of our friends that happen to be like head of department at Stanford to shake you down, and it doesn't work out well. So my recommendation, and if it does, you're probably going to get a check. So my recommendation is use things sparingly, focus on the keys in there, and then when we're overwhelmed by your like monicum of success, then you can sprinkle in that there's some innovative AI in there, right?
You say that, but it seems like every company I see is talking about their AI, and I'm wondering why. I mean, do they get a valuation?
Because blockchain wasn't working anymore, so they had to move to AI.
Seriously, is there a little bit of a bubble maybe? There's got to be a reason everybody's incorporating AI, and if there's a bubble, is that, has the VC market figured that out now? Let me put it that way.
I think, there are some things different now, and there are some things possible now. So I think we're kind of joking about it, but the capabilities that we can do at the edge, computing, the data that we have to train systems. So there are things that are around that are new and that are really exciting, and putting that to the front of your presentation is like, yeah, there's this, I don't know, satellite data set, and we can use this with our AI and do crazy things and create business. There's merit to that. I don't want to talk that down. We've been...
Yeah, no, I don't mean to like send anybody home or anything here. I'm just trying to basically say, don't get behind the AI bubble. Get behind the I'm solving a real problem, and then you can sprinkle in some AI if you're actually using it. But just know that we're not as susceptible as one might think to the buzzwords.
Okay. Okay, let me shift gears, maybe not, but I want to talk a little more about the future. I think I mentioned to you guys backstage that, so my teenage daughter is just scared to death of the future. She thinks AI is going to replace every job, including mine, by the way, which I'm looking forward to, but she's not. I want to ask you about that. What is the future going to look like? Not next year, but you guys invest for the long term, right? It's about a 7-year horizon, I suppose, before you exit. What's it going to look like 5, 10 years from now?
I'm still alive.
But I mean, are jobs going to be displaced? Are we really?
Well, okay, so you're going to see a sprinkling. All right, so first of all, we start, and it's interesting because we're very aggressive food and ag investors. Automation in the food industry is actually one of the biggest opportunities out there, right? If you think about how many people are at McDonald's, like doing very repetitive tasks that you could probably get a robot to do, which requires all the things we're talking about here: machine vision, computer learning, natural language processing, kind of the whole salad bowl of tech. Those are big problems. Now, there are ultimately rote jobs like that people are going to be, replaced by robots and so on. But at the end of the day, it's a shift, right? I mean, we don't see a lot of blacksmiths doing a lot of jobs anymore, right? The buggy wheel person is gone. If you look at it, I don't know if anybody has seen a CD-ROM lately or a floppy disk, right? There was a big business in replicating those years ago. So, this is the natural evolution. And, the great part about humans is there's just so much of ourselves we don't even understand. Digital health, for example, is a great example. We could spend the next 100 years and we're still going to be scratching the surface, right? If your doctor was as efficient, if your plumber and your doctor were compared, you leave your doctor's office and you kind of hope maybe you got it right. If you had a plumber that maybe fixed your stuff and told you to come back, you would fire that person.
Yeah, this question of AIO is going to get rid of all these jobs, and there won't be any jobs for our children. It's ahistorical. The story of the Luddites, the cotton gin came out. They're trying to put all the shirt sewers out of business, so they went around and destroyed all the cotton gins. Well, I don't think anybody sews, anyone in the world sews clothes out of by hand anymore. And that's by and large a good thing, except for I think we're talking about a neighbor sewing knit caps for my kid. She's probably the only one, or folks like her.
Yeah, but now it's art,
Yeah,
and it's
that's right.
super expensive.
Yeah, that's right. It's artisan now. But these situations have come over and over and over and over again. And, the famous economist called it creative destruction, right? So you create an industry, you destroy some. Some industries die, but new ones emerge. I mean, I think Amazon just put out a solicitation for robotic engineers for maintaining the robots that they have in their facilities. So new jobs come up. It's just inevitable. It's not something that I worry about.
Yeah, I think when I was at Siemens, we invested in a company called Bonsai. They provide those tools that help regular software engineers to deploy AI. So I think we're at that stage. They got acquired by Microsoft. We're at that stage where we're desperately looking for the talent. So if you can, if you're an AI developer, then I think you're in pretty good position probably to make enough money in the next 20 years to then get put out of work by a computer that programs itself. I don't want to make any predictions here, but I think happy to talk to your daughter about that.
Yeah, but 50 years ago, that same person, that same expert in AI would just be stuck in an academic department, so.
Yeah, which could also be a good life, but.
I think displacing has been going on for a long time. I lived in Tokyo in the early 90s, and there was conveyor belt sushi bars, right? Or order everything from a vending machine. I mean, definitely people were displaced at that time, and it's still going on in Tokyo. That you order from a vending machine and you go and sit down at the bar. I think where it's cyclical, it goes up and down. Where we have lots of labor, we have lower labor, and we look at elementary schools are teaching software development. And I'm not saying all of them, but it's definitely being implemented. For blue-collar workers, there are free schools for software training. If you graduate and get your certificate in 3 months, they allocate to find you a job. That's where they get compensated. So there are training programs out there to displace different types of workforce. So we can't just listen to the polarization of the press. We have to take everything in accountable layers and really look at reading between the lines, right? In the United States, we tend to swing the pendulum so far, that we always get caught up in the rhetoric of what may not be happening, which is, our press polarization. So I just want to say, can we try to strike balance in reading between the lines of our society?
One area I'm really worried about is robots writing news stories and creating news, or not robots, bots, and AI. So AI creating fake news, I think that's what I'm much more worried about than taking our jobs.
Well, family values and implementing common sense.
Okay, we've got about 15 minutes left. I'd like to open it up to questions from the audience. Anybody have a question right here in the front row?
I just want to challenge your last statements about AI not displacing people. In the past, the advances were mechanical. They replaced mechanical tasks. So like you say, I'm sewing by hand, I'm sewing by machine. But there's always this idea that judgment was an exclusively human preserve. And that even at low-level tasks, even if I'm working at McDonald's, I'm judging whether the burger is done. That was a human-only task. And all those people will be displaced. There's a lot of people who simply don't have the capacity to learn, to become a coder, or to become an AI expert. And maybe we live in this little bubble where we just think everyone is going to be like us, and they should.
All right, so I have a good answer for you. I'm just going to stop. So, all right, so robots, AI, etc. One of the biggest problems with robots is they need grease for their joints. And it's surprising, but it's a huge business opportunity. Someone actually pitched me on that, and I wish I could invest because it's actually one of the best ideas. That all of these, variants of robots, Google X uses tons and tons, by the way, of these grease that go in there. So while you took away the person's job who had judged the doneness of the burger, that someone is going to actually have to do that seemingly basic job of applying grease to the robotic joints. So these jobs are changing. I mean, and so the question is, would someone be more interested in watching a burger flip in, all the fumes, or would they be more interested in putting grease there, or, some cleaning the lenses of a computer vision? It all sort of sorts out in the end.
I think you're right, and I don't think the argument here is that jobs won't be displaced. It's simply that they'll be sort of shuffled around. So some jobs will end and new jobs will begin. And over the long term, I think it's a net win for the economy. Society, I'll take it separate. But of the economy, I think it's a net win. However, there are tremendous shocks in the short run, especially geographically. You can look at like coal miners in West Virginia, around where I grew up, and those economies suffer, or the Rust Belt. Those economies suffer, but it's short term. It's one generation, and over the long term, it's a net win for the economy.
And I want to say something. I don't mean to be esoteric any of this at all. I want to be well grounded in this statement, is that the United States is known for innovation. We are a young country. We innovate, we invent, and we export. That's what we're good at. That's why we're the largest economy in the world. We're still $8 trillion more GDP than China. So we invent and we export. So I think we can invent new jobs. We always find a way to get through it with our status quo.
Following up on that, I mean, do you guys think about that as you're making investments? Do you think about the social impact, or is it just all ROI?
Yeah, we do. I mean, probably around Fund 3, we started thinking about, could we get a little altruism in there with our greed? And, we started with a sense of a sustainability, which, doesn't always ring dollar signs. But, that's why we've moved into categories like the food system, like alternative proteins, like plant-based foods, things like that, where, not only we very good at it and seem to make a fair amount of money, but we also are making positive impact. So, there are lots of ways to do that. Our digital health companies, gave rural people access to medical care they wouldn't have. I mean, kids with, extreme conditions that travel 600 miles from, rural areas to go see a specialist, with a combination of IoT, mobile phones, and some AI built in and everything else, you're now able to get that expert at the Mayo Clinic to see someone that's, outside of Boise and be able to deliver that kind of care. So that when you sell a company like that, you feel really good, but you also feel even better that you helped a lot of people in the process.
All right, I want to put my money where my mouth is. We're called DNA Partners because we invest in people. That's our tagline, and we invest in the entrepreneurial spirit of your DNA. So it's not about ROI. It's about making a decent economy. It's about making a decent living. It's about making a decent world with ethics and values. Obviously, those are subjective, but...
Yeah, and we track greenhouse gas emissions. Obviously, that's the starting point, but also other ESG kind of markers.
Next question.
Questions?
Well, while we're waiting, I've got one. Carolyn, you said something about the talent. I wonder, is there enough talent out there in this space? Do you perceive that you said something earlier that just made me wonder, made me think that maybe you think there's a need for more people that have more talent in the space. Did that get?
So, I mean, a big shout out to anybody who is looking to apply, however you want to call it, AI, machine learning, advanced smart technologies to the hard industries. I see that a lot of talent from industrial and energy industries is lost to other, maybe better paying places that focus on what I'd call like more the ad tech world, where the industry I'm in just in places can't compete with. So we definitely see a shortage of especially computer science folks in the energy industry. If you know someone, we have portfolio companies in the area, in Houston, in Boston, and Denver, wherever you want to be, and they're looking for technical talent.
Yeah, and I just wanted to make sure we're not bumming anybody out here. I mean, I think at the end of the day, what we're trying to do is add value. And as you know, investors, I think one of the important things is we know you all came here because it was an AI conference. So I guess my basis is you've already bought into the concept. This is a good thing. So now what we're trying to, at least in my case, is trying to do is apply a layer of additional logic to that thesis, right? A logic that says, how am I going to apply it? So that when you do come to us, you don't get shot out of the water because the first word we see on the deck or on the executive summary is AI, right? We want you to come and say, we're solving this problem. And then you can tell us how you're solving it. And if there's some AI in there and it's super unique, then, again, that's a huge differentiator, which is one of the core things we look for to invest. So creating the differentiator, whether it's tech or market savvy or AI, they all need to be present.
Okay, questions right here in front.
There's a lot of talk about jobs being replaced, and there is a focus on physical jobs. Like a person, like I think you just described about the burger flipping robot and doing all that stuff. From the auto tech, we've understood that what is so easy for a human is very complex for a robot, especially when you put that in the real world. So do you see that AI is actually solving more problems on the digital side, not in the physical world? It's really more about analytics, data analytics, and decision making, as opposed to putting bots and more intelligent bots that are replacing jobs in the physical, mechanical world?
I think all of the above. I mean, I think, what's interesting about it is, there are a lot of people around the world that are flipping some form of food item at any given point in time. Our job is to find really big problems and invest in companies that solve them or, help people solve them. That's really what we're looking for. So the bigger the problem, the better a solve can be, number one. And number two, the amount of market share that they need to capture, if it's a big enough opportunity, it allows for these new technologies to move into a market in a reasonable pace, et cetera. So, I think if you look at it, there's also something unique about VCs where we want to, you see this old problem that's existed forever. And we sit around going, gosh, someone really needs to come up with a great solution for that. Now, sometimes it's wonky, like the pizza robot. We're like, that was a bad idea. But, when you get repetitive tasks, which really aren't great for humans to do because it's not really healthy and it's not good for their bodies, then it's a good solve, or hazardous task, especially when you look at energy and other industries.
Yeah, on the digital side, I think you're right that most of the companies or solutions have been really solving digital problems. I suspect that's largely because they know how to buy and use these solutions. It's selling tech to tech almost. But I think, at least thesis here at Autotech and probably for energy as well, and other physical, industries, that's going to change. And tech will soon be bought by those industries. And those are perhaps a little bit more worrisome since those industries aren't, as savvy buyers or users of those technologies.
Questions? Well, while we're waiting, Joe, I got one for you. I notice you do quite a bit of work in China, or you used to. Sorry to rub that in, but I've heard that China is just light years ahead of us on AI, and we may never catch up. What do you think about that?
I'd say the press is highlighting it and polarizing it. I'll use that word a lot for this answer to the question. There's a sophistication gap that is shrinking in China where, yes, mathematics is definitely promoted and rote memory is promoted, and AI is a lot of mathematics if you're compounding algorithms to learn from each other. I think that China tries to be the biggest and the best, and that's a great goal to strive for, and we did it in the 70s. And so they even have the same tagline as us, the American dream. They have something now called, President Xi called it the Chinese dream. So if we look at the actual AI versus AI right now, I think in us creating mathematic algorithms, we are leading. But if we look at 2 to 20 years out from now, they're going to be able to compound the algorithms that we create or that we co-create with them, because they'll be able to have a larger volume of data to compound those algorithms. And so they'll be able to use their citizens more as Facebook does, as products, right? So they'll be able to warehouse the data in much larger tanks than we do in the United States, and they'll have a lot more viability to data.
Yeah, I have a little bit different, I have an add-on thesis to that as well. It's not quite as deep or intelligent as what he was saying. It's a little more along the lines that we shifted a lot of the jobs we didn't want to do here, whether it's injection molding or using hazardous chemicals or sewing or creating fibers and, all kinds of things like that. We've sort of offshored that, so to speak, to China. So now they're grappling, the burger flipping in a much broader sense in a lot of these other categories, right? And since we've offshored it to them, they're now looking at the same problems in the kind of the lens we did with the automotive industry when we first brought in robotics, 30, 40 years ago. And they're looking at it saying they get it. They've got a real world application in the ability to automate basic, dangerous, repetitive tasks that, gives them a slight, even incredibly meaningful little tiny percentage of additional profit by being able to get a robot or automate a particular task. And when the margins are incredibly thin and they're fighting it's such a big country and they're fighting against each other, that little edge is valuable. So when you can quickly apply tech to a real world problem like that, it does make it more interesting. So, while I totally agree on the general thesis about how things could shake out on the algorithmic front, I mean, if you're running an injection molding company and people are getting burned and it's really nasty and there's all kinds of terrible things in the air, and you can get either a robotic or a machine and you can automate some of that, you might save a little money, you might save a few people in the process. That's really meaningful, and that's where it's really going in. What the investments that we've seen successfully done in China is because they were going very quickly directly into industry, and I think that's super exciting.
I do want to highlight something that piggybacks on both of our statements, is that China is prioritizing education and putting a significant amount of resources in educating their citizens in tier 1, tier 2 cities. And the United States is not prioritizing education. And so so their sophistication gap will shrink as far as they'll becoming more and more educated, and ours is widening. And so that's a very, very macro piece that I would love everyone in our nation to really notice, that ours is widening and theirs is shrinking when it comes to education. And then when it comes to privacy, obviously we know that one country is communism and one is not. Let's just phrase it that way. And so when you sacrifice privacy, then you are going to have better AI initiatives, because you're going to be compounding that data, like I stated before. And when you don't compound privacy, and when our citizens have less privacy, then we're not compounding that data.
On the training, I'll just make a point. I think you're absolutely right, and I'll go one step farther and suggest that the U.S. has always imported the best talent. Everybody would want to come here to work. I hope that continues in the future.
Well, on that note, I noticed that my AI-powered time-telling machine says that we're at the top of the hour. So I'm going to go ahead and conclude the panel. I want to thank you, panelists, for being here. Thank you, audience. Back to Rob.
And let's hear it for Roger Royce, a great moderator. Ladies and gentlemen, stay in your seats. It's time for what you've all been waiting for, the raffle. So I'm going to let every panelist participate in the proceedings. Jen, what's the first prize? So, Delivering Happiness by Tony Hsieh. And the winner is
All right. Atul Pada.
Tool.
Where is he?
Come on down.
Okay. We're not going to tell anybody you cheated by putting two in because it looked like they got stuck together, but it worked.
Well, don't put it back in. He's gonna win again if you put it back in. All right, Atul. Congratulations. Smile for the camera. We'll let it slide this time. Okay, Jeff. The next prize is The Start of You by by Reid Hoffman, founder of LinkedIn.
All right. Matthew Waltrip.
Come on down. Creativity Inc. by Ed Catmull. All right, Carolyn, you're up. And the winner is
Oh, I'm making it more exciting. Turning it on. Bradley Hofford.
Come on down.
There he is. Hey, Brad.
Creative. Yeah, smile for the camera. Joe, this is for you. The 7-day weekend.
All right, Sunday weekend.
7-day weekend.
Kazuya, Haso, Zawaya.
Come on down.
Hajimashite.
Congratulations. Enjoy your weekend. Smile for the camera.
Japanese.
Don't throw it back in.
Oh, threw it back in.
Copies of the classic by Roger Royce, Dead on Arrival. It's a classic.
You ready?
We have two of these. The first winner is, I know you got to put out your glasses, right? Drum roll, please.
Alex
Alex Malbach.
Bach. Starts with a C.
Got it signed by the man himself a little bit later on. And so we have one more copy of Dead on Arrival.
$15 on Amazon.
I thought it was more than that. Anyway,
Second winner is.
drum roll.
Drum roll. Where's my drum roll? Raghu Arahole.
Come on down.
Arahole.
Did you say?
Congratulations. So now it's time for the grand prize. It's from SAP. Pam? So tell us what it is.
Oh, thank you. We have a signed helmet by Marquise Goodwin, San Francisco 49er wide receiver, and kick returner. Anybody want to put a card in that hasn't already put a card in?
And the winner is?
Jinx Spot. Jinx Spot.
Come on down. Hey,
Hey.
remember you said you were going to win the prize.
So close.
Are you a Niners fan?
You could probably trade that for a book.
So ladies and gentlemen, stick around for the closing reception. We can hang around till 8:45, network, socialize, and connect, finish off the food. We would like to leave the building before 9 p.m. However, if you want to keep the conversation going, there is an after party. Talk to me about the location. You're all invited. Thanks for coming, and we'll see you next time.
Thank you.